So we've talked about diversifying our coins, but it is also important to diversify your purchases, when you purchase, how you purchase, all those things. This is our Bitcoin chart once again. So I'm talking about buying 2 tranches in my other video. I'm very adamant on that. And the reason for that is that you never want to go all in at once. You never know if this is really the bottom or not. I could buy a tranche down here in this box, and then Bitcoin could keel over the next day. We may just get down to that 27, 28,000 range. You never know. If that happens, if that's the bottom, I can buy down there too. I get it on a discount sale versus basically. This is actually, again, a form of diversification. You're diversing your timing when you're buying, and you're also breaking into smaller chunks. Ideally, the ideal form of diversification is buying continuously at all times. That is theoretical. You can do that to some extent. Coinbase, buy a little bit each day. You can automatically set up. I think the fees would eat you alive if you did that. So that's one way. Dollar cost averaging, as I just mentioned or hinted to, is your ultimate form of diversification of your purchase timing. I was really pushing that a couple of months ago when we were still on the way up. And if you're not into that, you could do a hybrid approach. So what you could do is you could buy a big tranche, a lump sum down here in this buy box, and then you can set your dollar cost averaging just to go indefinitely, however many months you want to go, weekly, bi-weekly, whatever you want to do. That way, if we do dip lower, then you can continue to, well, you can buy the dip, you get your cost average down a little bit. If we do go up here, why am I going to buy a tranche up here? My plan is because once you get through what we call the pivot, so let's say we only retrace, 50%, that's about what we're projecting. Once you get past this zone, I would actually say the 0.764 zone, that's essentially a confirmation that we are in the next bigger third wave up. That won't be the last chance to buy, however. So this is our little 5 waves up, and we're in the middle of our correction. I know it's a little small, but bear with me. This projects up to about $49,000 to $51,000, $52,000. That would be a larger 5 wave impulse and a larger wave 1. And then we expect another fractal pullback, another wave 2, and then you'd expect another bigger 5 wave impulse beyond that. You'd get another chance to buy on the wave 2 down. And if that wave 2 comes down to about $40,000 or so, that's still a lot of upside. So if you're a bit more risk averse, or if you're looking for another place to deploy a large amount of money, that would be another place to do it. Basically, this higher degree up. You have a bigger wave 1 and then a bigger degree wave 2. This is the same case in most of the cryptos. If you are a little nervous about buying down here, it's not a bad idea to wait for a larger impulse to develop. That's actually what's going on in equities. A lot of Elliottians are deciding to wait for a bigger 5 wave up before buying the dip.